McDonald's. What is happening out there, folks? Is this company still flying high as the number one fast food restaurant in the world? Has it decided we need to get more healthier, so we're going to put healthier buns like brioche buns on the burgers to make them taste nicer? So it's about quality as well. And McDonald's prices have gone up. Like you used to say, yes, it's cheap to buy from McDonald's, but it's not really the case anymore. You're paying quite a bit of money to try and to get food and might not necessarily be the best tasting. Other people argue it's the best things to sliced bread, but let's get twisted. The burgers are pretty average, but often you can fall into wanting to buy McDonald's because it's nice and convenient. And that's why McDonald's has been such a great company for a long time, because conveniency is still king for a lot of people. So we are going to do a stock analysis on McDonald's. We're going to look at the financials from revenue, net profit, earnings per share, return on invested capital, long-term debt, total assets versus the total liabilities, free cash flow, and so much more. And at the end of this video, we will give you a potential stock intrinsic value of McDonald's, where it is currently, where it could be in the future, so you can do more research before you invest into any stock. Invest at your own risk, not financial advice. Well, welcome guys and gals back to the channel. McDonald's, yes, the big McD's is here, what we're going to talk about today, and we're going to look at revenue. Yes, but before we talk about the revenue, what is McDonald's? If you don't know, if you've been a pie in the sky, there's that big yellow M sign that's up in every corner of every major global city in the world. You can go not too long down the road and there will be another McDonald's. McDonald's is everywhere, just about every corner, just like Starbucks in America. But McDonald's is all around the world. Yes, all around the world. In the major global areas, McDonald's is there. Boom, boom, boom. And if Africa goes that way, you will see McDonald's go there in a big way if they improve their infrastructure. So McDonald's has potential for growth going forward. But right here, right now, what's McD's doing? Revenue has gone up from $22.8 billion to $24.6 billion, so it's been increasing. But what was very impressive is the bottom line, $6.1 billion to $8.3 billion, folks. So 25% gain right there, right now. Beautiful. Actually, probably 25% roughly. Yep, so very much where you want to be with your net profit, so it's very good to see. Earnings per share at 11.8, P/E ratio 25, just a 25.1. So there's still potentially, you're looking at growth in this company according to people. It's pretty much a safe company. The dividend, 52-week range of 245 to 302. So it's in the high range at the moment, the stock price. If we go over the 1 year, you made 13%, and over 5 years you're 67%. So it's sort of around the market, how much the market is making is McDonald's in terms of a stock, in terms of investment. But in the last year, it's been pretty impressive looking at these stats. Dividend yield of 2.2%. At 6.68 payment each year, and that continues to rise for McDonald's. Short interest of just 1%, so it's not even really worried about. They're not expecting McDonald's to fall over anytime soon. With a $216 billion market cap, can you see a 4x to $1 trillion? Can they be a $1 trillion company one day, McDonald's? They have been around a very long time. And it all depends on if they can continue to grow revenue and their profit. Simple as that. And they can grow into more countries, or even add into the countries they're at, and still just keep building. If they can do that, very impressive. But this is where we get a little bit worrisome. Total assets of $50 billion up to $52 billion, but total liabilities of $56 billion, or stay pretty much the same over the last year, $56 billion. And what is killing them is the $35 billion up to $37 billion in long-term debt. That is the killer. The long-term debt has been the absolute killer for this company, and it is one of the danger zones for this company. If there's a danger zone, it's the long-term debt. Your long-term debt's more than your market, no, not more than your market cap, sorry. Going a bit crazy there, but just it's so high, very high. It's nearly 20% of the market cap. Very high. They need to do something about it. They need to really work on getting their long-term debt down because their free cash flow is very nice, of 5.2 billion to 5.5 billion, but you're looking at about 6 years to pay off the long-term debt. We want to get that down quicker than that. Shares outstanding, 728 million. They've been doing buybacks for a while, so pretty good on that front. And return on invested capital at 20%, which is pretty good. Pretty good. Yes, so McDonald's. What's the McD's future look like? Can McD's turn it around for you? Are they a stock? Are they on the rise? Can they do what you need to do? McDonald's is very good. Has been a very good company for a long time, but it's been a steady one. Can you find potential for growth? That is where you need to see. So let's have a look at potential. Sort of said, yeah, McDonald's. So growth in other countries and countries they haven't been to in the current company. Countries getting more and more stores that are winning. Not losing, they need to be winning. If they continue to do that, they will continue to rise. But can McDonald's start to slip away and not be existent? People not go to the store anymore because the food's not good enough. That is the question mark for McDonald's. They've survived so far, but this clean eating culture that it has been coming more and more, there's still the thing. But if the youth of the generation in 40, 50 years time say no to McDonald's, that's when you got to worry. But probably for most people's lifetime now, they don't have to worry about it. But the next generation could be dangerous for McDonald's. But anyway, let's have a look at the intrinsic value, which will look at the current share price, earnings per share, growth rate, and bond yield to give you potential intrinsic value, not financial advice. Invest at your own risk. But let's have a look at the intrinsic value roughly at the moment. So current share price have gone around 295. At earnings per share of 11.8 with the growth rate of 5%. If you think 5% for the rest of the time, you're overpaying at $227. If you think there's a 10% growth rate each and every year at the current earnings per share of 11.8, then this stock is currently undervalued at $350 is the intrinsic value. If you think this company's earnings per share can go up to 17, with the growth rate of 10% still with the current bond yield, and this stock is a $505 stock. So potential to make money, folks. And then if we think you're going to do 15% for the end of time and double the earnings per share to $24, then you buy the stock every day of the week at $963 for a 3x from here. Yes, so that's what you need McDonald's to do at least. If you want to get 3x, you need McDonald's to double the earnings per share and grow at 15%, which they're not doing currently. They're barely growing at 10% for the revenue that the net profit is. But you need the revenue to go up because most people look at revenue. So you need revenue to go to 15% each and every year. Then McDonald's could be a potential buy from here. You go from 300 to 900. So that is where you need McDonald's to go if you're an investor or looking to invest in this company. If you want to make some decent money, you can maybe double up within like 10 years or so. But if you really want them to really fly to the moon, that's where you got to look. That's where you got to look, folks. You got to hope McDonald's is going to fly to the moon if you want to invest. Anyway, that is the stock analysis for McDonald's, intrinsic value. Just giving you just some of the basic tools just to understand McDonald's a little bit more in terms of the financial side of things. You do more research and understand the company more at a deeper level, then potentially it might be a stock for you. But this is Barry Charles signing out. Remember to like and subscribe to the channel, share this video with your friends, and I'll be back each and every week with 3 videos a week so you can understand stocks more. Have an awesome day out there, my friends.